Dow heads for worst day since 1987 as record bull run ends. It's been a crazy few weeks, you guys. The stock market has been on a seriously roller coaster spiral. I've lost over $1,600. My all-time return is negative 40%. It's been absolutely crazy. I mean, if you guys actually take a look here, my companies are down, all of them. Real estate down $569. Finance down $435. Everything is literally down. I mean, healthcare as well, down $107. My industrials down $113. It's been absolutely insane. I mean, just today actually, the markets, the S&P 500 down 10%, Dow Jones Industrial down 12%, and Nasdaq down 10.64%. It's absolutely insane. If you guys have actually been staying tuned since my last portfolio update, my portfolio value was at about $4,000, and now it's at about $6,000. I've actually put in about $7,700, but of course, with the negative market gains, it's gone down. In a crazy time like this, I'm actually buying even more. I'm actually taking advantage of this, downturn, market crash, call it whatever you want, to buy into companies that I already own that I really want to buy more of, and to buy into new companies that I really want to have ownership of. And if you guys remember in my last portfolio update, I had about $18 in dividends, and now I have over $43 in dividends in over, I think, about a month or so. And as you guys can see, I have cash here in hand, $353 that I'm getting prepared to deploy. I want to let you guys know that this $1,644 is not real, at least to me. I make it real by locking in those losses, but I'm not planning on doing so. If anything, this is that buying opportunity that everybody talks about. And of course, I'm taking advantage and I'm buying in. I've actually been preparing for this moment for a very long time. I have my cash reserves set aside, ready to go, and they're getting put to work, which is why you guys have seen my portfolio go up in value in 2 months' time, or a month's time, if I'm correct, over $2,000. It's actually one of the dopest parts about dividends. Whether the market's going up or whether it's going sideways, whether it's going down, it doesn't even matter. If your companies are solid, they're going to keep paying you your dividends. These companies that are down, all of these, my real estate companies, for example, SPG, LTC, Federal Realty Investment Trust, Realty Income Corp. These are all down, especially Simon Property Group. And there's a lot of pessimism going on with Simon. But check this out, you guys. These guys are still paying me my dividends. $3.60. Whether they're going up or down. I still personally believe that malls have a place in the future. So I'm buying in right now. And that's really what I'm invested in the market for passive income, for money that I don't have to work for. And that's what I really love about this strategy, you guys. And I also wanted to get into some of the companies that I've actually bought into since the last time that I showed you guys my portfolio. A lot of things have changed. It was at 4,000. Of course, it's now at $6,000. And not only just that, like I mentioned before, I've actually bought into new companies as well, mostly in the consumer pie. I remember telling you guys that I kind of messed up on my consumer pie, but I just had to add a couple of these companies. Their prices are starting to enter territory where, I have to buy in. These companies are solid companies. McDonald's, a burger and real estate company, the Home Depot. These guys are huge. Nike as well. Disney's absolutely huge, and they're gonna be suffering for a little bit right now due to the theme parks closing due to the coronavirus and things like that. And people are selling them off. We can actually take a look at Disney's price real quick. It's low. Check this out, you guys. Check this big dip out. They've gone down to $95 from an all-time high, or not an all-time high, but a yearly high of $151, down to $95. And I honestly believe they're going to go down even lower. But I don't like to time the market, so I'm buying in now and averaging in. Nike's another one. Nike's a huge company, as you guys may know. Everybody knows Nike. And check this out, you guys. Another dip. Another dip. They went from $103 all the way down to $66. That's a huge dip. It's crazy. A lot of these companies are just going down in price. And, I want to take advantage. Like I told you guys, I'm a young investor, so I'm here for the long run. Check this out. Home Depot, $247 was their all-time high, all the way down to 164. It's absolutely insane. So these are the couple of the companies that I bought into. Just to recap, Disney. I bought into Disney. I bought into Nike. I bought into McDonald's. I bought into Home Depot, and I'm about to buy into Starbucks. I really, really do like Starbucks. Uh, they're just such a great company. And check this out, you guys. So these guys were at about $92. They were about $98 back in 2019, and now they're at $58. And I feel like they have lower to go. But like I mentioned before, I'm gonna average in. Of course, I've done my research on these companies, which is why I'm confident in these companies. But anything can happen. It's a stock market. Anything can happen. But I'm confident that these companies are going to be around for the long run, which is why I'm buying into them now when pricing is low. I've actually bought into Lockheed Martin. These guys are a solid company. Most of Lockheed Martin's money is made from aeronautics, or to keep it simple, airplanes, uh, jets, aircraft, all that stuff. And they make it for the United States, the military, you could say. And so these guys are a huge company. And check this out, man. Again, their highest was about, $439. And now they're at 287, almost half basically. I mean, it's crazy. And I feel like these guys are going to still keep going lower as the coronavirus fears continue. So after Lockheed Martin, I've actually added a completely new sector to my dividend portfolio, the technology sector. And I've added Apple, Microsoft, and Broadcom. Apple shares are down tremendously. We go again back to the 1 year. This had a pretty significant dip right here. So they're down to $242 from their all-time high for this year, being $327. And of course, you guys know Apple. It's one of the biggest companies in the world. And I've also added Microsoft. Again, check this out, you guys. Another dip. Their yearly all-time high was 188, and now they're down to $135. And I feel like it could honestly go even lower. I'm telling you guys, it's been crazy. This market has been absolutely wild. There's recession talk. There's bear market talk. Well, I guess we're officially in bear market territory. But I mean, like I told you guys, it's crazy. And I've also invested into Broadcom. Broadcom is a huge company as well. They make tech equipment for huge companies like Apple and Samsung. You guys actually can check out right here. These guys are huge as well. And check this out, you guys. In 1 year, they've dropped over $100, and most of that has been here very recently. Their high was about $323, which is pretty expensive. And check this out, you guys. It's gone even lower to $187, all the way from 320. It's been crazy. And of course, I bought in, and I'm not too sure if it's going to keep going lower, but either way, if it goes lower, I'm going to buy in. If it goes up, I'm still going to buy in. I'm going to dollar cost average. And so, all in all, I bought into Starbucks, Home Depot, McDonald's, Nike, Coca-Cola, Disney. I've also bought into Lockheed Martin, and if I'm correct, I think Caterpillar I didn't have in my last portfolio update, which is another company I bought into, obviously. And I've also added a completely new sector to my portfolio, my technology sector. And of course, I've added Apple, Microsoft, and Broadcom. Now, the only sector I'm actually concerned about is my energy sector. What's going on with Saudi Arabia and Russia right now, the oil price wars, it's really affected ExxonMobil, tremendously. These guys' main business is oil. So with oil prices being low, these guys are suffering. And you can actually tell by their stock price, it's actually just went straight down. Their highest being about $83 for the yearly high, and now at $34. It's insane. These guys are a huge company, though. Don't get me wrong. These guys are actually one of the biggest in the world, if I'm correct, in terms of oil. But with this price war going on, these guys have absolutely tumbled. Crazy. I think might be their biggest drop ever. Yup, look at this. This 5 year graph. This is their biggest drop ever. And I'm actually concerned about this because ExxonMobil can withstand the pressure for a little while, but not forever. And nobody really knows how long this price war is gonna, go on for. And not to mention that oil hasn't had the best of reputations as well, which is why I am genuinely concerned about this sector in my pie. ExxonMobil specifically. I think Dominion Energy is going to be fine. It doesn't really have to do with oil, but just ExxonMobil, like I mentioned, you guys, is suffering a lot. I've actually lost over 50% of what I put into this company, and it's probably going to go even lower with tensions rising. So the finance sector has been going crazy. Bank of America, for example, these guys have lost so much in value, at least on paper. And check this out, you guys, huge dips. So their highest was about $35, $35.64, and they plummeted down to around $20. I think the last time Bank of America was this low was in 2016. Yep, right here, when they were still recovering from the 2008 market crash or recession. And they're right at that point now again. And they could possibly go even lower with the Fed lowering the rates. Yeah, the banking sector has been affected greatly. Aflac is down $73. Bank of America down 72. JP Morgan, the biggest bank in the United States, is down 74, 47%. They're down to $88. And again, we can check this out, another dip. So their all-time high was about $140, and now they're down to $88. Yeah, as you guys can see here on the 5-year graph, the dip is pretty significant right here. And I'm just going to keep buying in. I'm just going to keep averaging in like I told you guys. I don't really want to wait till everything goes low because nobody really knows when this is going to stop. So I want to take advantage of this opportunity now and buy as everything goes lower. And if it starts going up, I'm just going to keep buying as well. And this is my quick portfolio update. My plans are not to just post when my portfolio is doing good. I want to post when things like this are happening as well, because this is a very real fear people have, losing value in their portfolio. And yeah, you guys, this has been a quick little portfolio update for you guys. Stay tuned. I got a lot more videos for you guys that I feel like you guys are going to really enjoy. Helpful videos on how to capitalize on this type of situation, how I actually research my companies, which I feel like could be pretty helpful for you guys. And yeah, stay tuned and take care.